Gold is the ultimate currency. It's not controlled by any central banks. There's a finite quantity of it on the Earth's surface. If you go back to the last hyperinflation cycle in the late 70s and early 80s, gold at that time in 81 achieved $850 an ounce in 1981 dollars. In 2021 dollars, that's over $3,000 an ounce. There's no reason we shouldn't be there at the end of this year, if not sooner.
Hey everyone, thank you so much for watching Yankee Stacking. 4 months ago, I suggested checking out Newfound Gold. 2 months ago, I told you about Uranium Royalty Corp. And just 1 month ago, I made you aware of a mining company called Nevada King. It's at an all-time high. Today, I'm speaking with David Garofalo, the chairman and CEO of Gold Royalty Corp. I am being compensated for this interview and for the video production that comes with it, but I am not being paid to say anything positively about Gold Royalty. But I strongly suggest you listen to what David has to say as he talks about the economy, precious metals, and of course, his company. Good morning, David. Welcome to Yankee Stacking.
Thank you for having me on.
All right. And it is really early, isn't it, for you? You're out in the West Coast, I think.
I am. Yeah, it's about 6 a.m., but it's all good.
Oh, I appreciate that very much. You're on a stacking channel on YouTube, gold and silver, physical precious metals. We love our precious metals. I have some right here in front of me. I got to ask you, do you stack any precious metals, David?
Well, I do. I have some in my safe, but I actually pulled some down from my wall. It's a keepsake from my years at Agnico Eagle.
Cool.
It's a 1 ounce wafer, and it's
Oh,
steady. It's on my wall in my office.
Can you move it over a little bit? I can't quite.
Yeah,
Oh, there it is.
yeah.
Whoa. That's gold? An
It's
ounce?
gold. It's a pure 1 ounce wafer. Yeah,
Oh,
with the symbol AEM on it, which is Agnico's stock symbol on New York Stock Exchange. That's my old company from many years ago.
oh, beautiful.
Yeah.
That's special, isn't it?
It is. Yeah, it's quite a keepsake. Hopefully nobody steals it from my wall, but I'm not going to take it down. So
Yeah, that's always a concern with physical, but hey, that's great. I don't know if you know this, but Federal Reserve Chairman Jerome Powell announced yesterday, actually, we're recording this on Friday, he announced that the Fed would take a, quote, leading role domestically and even internationally in the development and use of central bank digital currencies, or CBDCs. He said a discussion paper outlining their view and approach on digital payments would be released sometime this summer. What do you think will be the ultimate end with digital currencies?
well, that underlines my criticism of the digital currency market is there are no barriers to entry. So what Jerome Powell's saying is basically he's just going to turn it into another fiat currency. And so there's this illusion of scarcity around Bitcoin. And sure, there's only 21 million of those Bitcoins, but there's nothing stopping anybody else from creating another digital currency to capture market share. And that's my criticism of cryptocurrencies generally. I, I, I think there's a place for cryptocurrencies in this market. It's a means of transacting within the blockchain. I understand that.
Hmm.
So it's here to stay, but the valuations are ridiculous, particularly when you consider there's no intrinsic physical value backing them. And that's why I think gold is the ultimate currency. It's not controlled by any central banks. There's a finite quantity of it on the Earth's surface, 200,000 metric tons that has been mined since the beginning of time. Just to give you a sense of what that looks like volumetrically,
Hmm.
it fits into 4 Olympic-sized swimming pools. That's it. And
Wow.
as an industry, we only mine about 4,000 metric tons per year, and that is declining because reserves are down 40% over the last 7 years. That's reserves in the ground. So in other words, the producers have not replaced what they're depleting, and they're mining less and less of it every year because there's less of it in the ground. And there's a remarkable inelasticity of supply to price. It doesn't matter if the gold price goes up. The reserves have been going down for 7 years. Production is going to be going down for a decade or more, even if we make a major discovery tomorrow. Lead times to new production is 10 to 20 years. There's significant barriers to entry into the gold market, unlike the cryptocurrency market, where any dog and pony can create a cryptocurrency to
Right.
capture market share from
I
gold.
could create Yankee coin if I wanted to.
You can, you
Yeah.
can. And the reality is, until about a year ago, the juniors in our space could not raise a dime to save their lives. They were not exploring, and the seniors certainly weren't. I mean, they're doing a good job of harvesting profits from their existing mines and paying back dividends and deleveraging. The industry has net zero debt today. That's the first time I've seen that in over my 30-year career in the mining business.
Wow.
So they've done a great job of bringing themselves into great financial condition, but they're not in great shape in terms of the reserves and production profiles that they have.
I also think about our current administration, the Biden administration. It just seems like they are all in on running our national debt up with more stimulus, government spending. Frankly, I think it would make FDR blush the way they're going at it. To be fair, all the presidents in my lifetime, at least, regardless of party, have presided over greater and greater government spending and debt. But it seems like we've taken it to a whole new order of magnitude now, and the Fed is just printing round the clock. Are you concerned about a sovereign debt crisis and the U.S. dollar maybe losing its, coveted reserve currency status in the world?
Yeah, you're absolutely correct. I mean, it has been across political lines in terms of what's been happening in the market. And I would harken it back to the credit crisis about a dozen years ago, when not only the US, but all the central banks globally in the industrialized world coordinated their efforts in quantitative easing
Mm-hmm.
to dig us out of what was then an existential crisis in our financial system. But they didn't stop after the credit crisis passed. They continued to print and they kept interest rates at exceedingly low levels. Where today there are some sovereign interest rates or central bank interest rates that are negative territory on a nominal basis, which certainly is there on a real basis, particularly given where inflation has gone. I think the headline number most recently was over 4%, but we all know real inflation is well in excess of that. If you're trying to buy a house, real estate prices are probably up 30 to 40% over 1 year. How is that not hyperinflation?
Exactly.
And that's really been driven by the massive amounts of printing of fiat currency that's occurred across the world, not just in the US, globally. It's a coordinated effort to debase currencies competitively to preserve export markets.
Mm-hmm.
And so, yes, it will create a sovereign debt crisis because the reality is all that debt that's been strapped on, particularly through the pandemic, has no hope of being repaid. There's no fiscal plan to repay that debt. So effectively what the governments are doing is inflating their way out of that debt and debasing the debt.
What about gold and silver? Do you think that inflation will be ultimately seen dramatically in gold and silver prices? Do you think it's going up much higher?
Yeah, so we're not even at the all-time highs for gold. Some people look at last year's $2,000 handle and they say, "Well, we reached peak gold prices then." In fact, that's not the case. If you go back to the last hyperinflation cycle in the late 70s and early 80s, gold at that time in 81 achieved $850 an ounce in
Wow.
1981 dollars. In 2021 dollars, that's over $3,000 an ounce. There's no reason we shouldn't be there at the end of this year, if not sooner, just given where the headline inflation is going. They can't keep a lid on it anymore. Gold is an ultimate barometer of that. That's why gold is held in there. I would say, admittedly, that cryptocurrencies kind of stole their lunch recently.
Hmm.
And that's because instinctively, the new class of investors that come into the market understand that their fiat currencies are being debased and they're trying to find a life preserver to safeguard their capital. And as I said, Bitcoin created this illusion of scarcity. And the young investors said, you know what, I'm going to buy this. I'm going to chase it. But I think inevitably they're going to find out that really it's just zeros and ones that are backing up digital currency. And again, there's no barrier to entry, gold is the currency they're going to come to.
I think it might be a good time right now to have you explain, at least at a high level, the royalty business model as it relates to mining and explain why it's such a powerful option for investors.
What a royalty company does is they lend capital to the producers and developers who are looking to build new mines, and we take back a royalty in return as repayment. And a royalty is a certain percentage of the revenue, typically 1 to 2%, or you can take a component of the physical metal back as a stream. Either way, it's a royalty or a stream, same thing. You're taking a percentage of the top line. So you have the full leverage to the gold price. So if the gold price goes up, your 1 to 2% of that revenue will go up. If the company that you're partnered with also has a successful exploration program that grows their reserves, your royalties on the deposit and its growth. So you get the upside to exploration. What you don't get is the operating and capital cost risk. You're not exposed to that at all. You don't care about the margin at the mine because your exposure is entirely at the top line. So it's the best of all worlds in my view. And typically, it outperforms all gold equities in a rising gold price environment. A lot of the royalty companies are being operated by people that are just financial engineers. They've never done this before. They don't understand how operators think. We have a very deep Rolodex that we can leverage. We can open up any door to any major company in the world and talk to their CEO, their head of corporate development about ways to help finance their mine development and exploration.
Mm. Wow, you kind of jumped right into the first of my Yankee quadrant. Four things. One is management, projects, ownership, and financials. So could you start with yourself too? Maybe your background?
Yeah, so I've been in the mining business since 1990, and I've been in the mine development business as well. I've operated scores and scores of mines. I helped develop 15 mines over my 30-year career across the world, both gold and base metals. And most recently, I ran Gold Corp. I merged that with Newmont in 2019 to create the world's biggest gold company. Before that, I ran Hudbay Minerals, a base metal producer that has operations throughout the Americas. I built 3 mines there, and then before that, I was the CFO of Agnico Eagle for 12 years. We built 6 mines in 12 years I was there. And before that, with another base metal company called Inmet for 8 years. So my background is very much operational. On the board, I have Alan Hare as a board member. Alan was my successor at Hudbay. He was my chief operating officer when I was there, 35 years as a metallurgical engineer and a prolific mine builder over his 35-year career. Warren Gilman, who runs Queens Road Capital out of Hong Kong, that's Li Ka-shing's natural resource fund. He's a cornerstone investor in the company and also on the board. And the reason, and it's unusual for him to join the board of his investee companies because he has a very broad portfolio of investments, is because he's known me and Ian Telfer, who's on my advisory board for over 30 years. And he enjoys working with us, and he really believes in our investment model here. Ian Telfer is the chair of my advisory board. What's interesting about Ian, in addition to having been my chairman at Gold Corp, he was the founder of Gold Corp and the founder of Wheaton Precious Metals 15 years ago. That's the second biggest royalty and streaming company by market cap in the world. That was spun out from Gold Corp 15 years ago with some royalties on Gold Corp's assets, mining assets, and then diversified itself and grew dramatically after that. That's precisely the model that we pursued with Gold Royalty. We spun ourselves out of our parent company, Gold Mining, with royalties on each of its dozen projects. And so we've started with this foundational element of reserves and resources. We have collectively over 26 million ounces of gold within that portfolio upon which we have royalties, or 31 million ounces on a gold equivalent basis, because there's a lot of copper byproduct in some of those projects.
You're involved in companies all over the Western Hemisphere. Can you just name a few standout properties in your portfolio?
Yeah. So as I said, collectively, those 18 projects have 26 million ounces of gold resource. And some of the big projects are Ititi-Ribi in Brazil, Whistler in Alaska, really across the Americas, as far north as Alaska and as far south as Brazil, among a collection of very diversified projects upon which we're actually starting to put some capital into. Or Gold Mining is our parent company. And to that end, Gold Mining hired a new CEO who used to work for me at Gold Corp, Alistair Still. Alistair is a very well-established operator and mine developer, and he'll be laying out a program in very short order to realize significant value and attract outside capital into these projects from established producers who are otherwise starved of development stage assets, which Gold Mining has a dozen of, or from the capital markets who want to see these projects de-risked and re-rated in the marketplace. And as Gold Mining de-risks and re-rates those projects, our royalties benefit from that as well, because they get higher valuations in the marketplace. There's a lot of organic growth within Gold Royalty without us having to necessarily go out and buy a lot of things.
It looks like there's some mineral-rich locations here, some really good ones. In fact, I love Yellowknife. I'm familiar with Whistler.
Yeah.
There's several big names here.
A number of them are actually brownfield projects. In other words, they're They're in areas where there has been mining activity and continues to be mining activity. So I call it brownfield as opposed to greenfield because generally there's a lot of infrastructure there. There's much lower capital intensity required to build them out as a result. They're not necessarily in the most remote regions of the world. And without exception, every one of these projects are located in mining-friendly jurisdictions. And that's a key criteria for the royalty business as we put capital to work. We don't want to put capital into a project that'll never get built.
Mm-hmm.
We want to get royalties on the projects that have at least a reasonable horizon to mine production. As we look to diversify gold royalties portfolio and start to put that $90 million of treasury to work, we're going to be focusing predominantly on projects that are in production or close to being in production and start to introduce some cash flow into the model.
I see. So none of the current holdings right now are in production, or are some of
No,
them?
they're all development stage at
Okay.
this, but fairly well advanced in the development stage through feasibility work and whatnot.
All right. Let's shift to ownership. Who are the major shareholders?
Yeah, so insiders are 5% of the shareholder base. Gold Mining retains 48%, our parent company. They retained, as we spun it out in the IPO back in March, they retained 48%. And this is a long-term investment for them. They're looking to enjoy the re-rate in our royalty portfolios. We diversify it, and they, create value within their underlying portfolio, which will benefit the royalty company. So we have a very, very strong supportive institutional shareholder base, and the rest is retail. They're very sticky investors, which will help us support our model as we look to grow it and diversify it beyond what we inherited from the spin out from gold mining.
Your ticker symbol for Gold Royalty Corp, it's GROY. It is on the New York Stock Exchange, which is actually good because some of my viewers have found it hard to use their trading platforms to invest in over-the-counter stocks. Not so with Gold Royalty. You'll be able to invest very easily if you're interested. But let's touch on your financials.
What couldn't be simpler? I mean, we have 42 million shares outstanding. We have $90 million in the balance sheet. We have no debt. We have a small amount of stock options outstanding, so you're not going to get yourself diluted. That $90 million in cash would be put to work to buy cash flowing royalties. So we intend to sustain ourselves, keep the share count low, and grow the business substantially through acquiring highly accretive, high rate of return royalty opportunities. But I also think there's another opportunity in this sector today, in that there's been a proliferation of sub $1 billion royalty companies that have come into the market over the last couple of years. There's too many of them. There has to be a rationalization of that. There's going to be consolidation. And the reason we position ourselves with the very experienced board management we have is we intend to be a consolidator. We intend to start to scoop up some of these companies and create critical mass quickly and diversify more quickly by consolidating some of the other companies in the space.
There's one other feature about Gold Royalty Corp that I appreciate, and that is your environmental, social focus. You're committed to that, aren't you, as a company?
I am, and honestly, and not to toot my own horn or Alan Hare's horn, who's on my board, as leaders of operating companies over the last 30 years, I prided myself in working in companies that had exceptional safety records and exceptional environmental records. And while as a non-operator, a royalty owner, we don't have direct influence on how the operations are run, what we do have direct influence over is who we invest in and who we take royalties back from. So we have very stringent criteria about who we partner with, which operators that we think meet our stringent criteria for ESG, environmental and social responsibility. So it's extremely important that we do that work up front before we give them the capital to develop and explore their mines.
If people want more information, David, about Gold Royalty, how are they going to get in touch?
Sure, it's simple. It's goldroyalty.com. Hard to forget. We got kind of Kleenex brand of royalty companies. It's hard to forget our name,
I know,
and
right?
it's easy to
It's
find us.
perfect.
So it's amazing that name was unprotected when we created Gold Royalty, but it's obviously going to be a big benefit for us in terms of brand recognition with our shareholders.
I was thinking the same thing. I'm like, Gold Royalty. How did that happen? That's a great
It's
name.
a mystery.
Oh, wonderful. Well, Dave Garofalo, Chairman and CEO of Gold Royalty Corp. Thank you so much for joining me today.
Thank you for having me on.
I personally invested in royalty companies before I got into junior or even major mining companies. It's a great way to diversify and get into the action on gold and silver that I think is coming real soon. Check out Gold Royalty Corp, GROY, and I hope your day is A-OK.